Hello, dear friend, dear lovers, dear followers of this PATERA TV, your learning and training platform about business courses. I'm called Benone. Today we are going to give suggested answer to this written exam for accountant questions. Dear friend, dear followers of this PATERA TV, this questionnaire contains 4 questions. The first question and last question is concerned to circles, are specific to circles, but the second question and the third question are general question to accountant. So the last video we have given suggested answer about to this question 2. Question 2 asked to calculate the total net pay to employees. So today we are going to give suggested answer to the question 3. The question 3 is about to bank reconciliation. So this question 3 is asking that A. Explain the main causes of a disagreement between bank balance as bank statement and cash book balance of Imbalto Sako. The B is asked that at 30 September 2017, the debit balance in the cash book of Imbalto Sako was Rwandan franc 80,550. A bank statement on 30 September 2017 showed Imbalto Sako to be in credit by Rwandan franc 111,230. On investigation of the difference between the two sums, the following items were established. A. The cash book had been undercast by Rwandan franc 9,000 on the debit side. B. The checks paid in not yet credited, but the bank amounted to Rwandan franc 20,820. C. Checks drawn not yet presented to the bank amounted to Rwandan franc 42,535. So Imbalto Sako needs you to show the correction to the cash book and show a statement reconciling the balance as per bank statement to the balance in the cash book. Dear friend, dear followers of this PATERA TV, we are going to give suggested answer to this question by starting on the sub-question A. A. Dear friend, dear followers of this PATERA TV, remember the purpose of a bank reconciliation statement is to explain the difference that exists between the bank balance and cash book balance. So the disagreement between the two balances are caused by the following reasons. Dear friend, the disagreement between the balance shown on cash book and balance shown on the bank statement is caused by the following factors. The main reasons are in 2 categories. The first category are items appear in cash book but not appear in the bank statement. It is possible that there is some certain items which appear in cash book but not appear in the bank statement. Those are the first categories. In these first categories, examples, you have outstanding check. So outstanding check is also called unpresented check. What is unpresented check? Dear friend, the unpresented check is checked down and entered in the cash book. The business draw a check and entered in the cash book, but not presented at the bank for payment until after the relevant date. The business draw a check for their customers, and the customers are not present that check to the bank in order to get payment until after the relevant date. That check is called unpresented check. Another example of item appear in the cash book but not appear in the bank statement is uncredited check. So uncredited check is also called outstanding lodgement. This check received and entered in the cash book. So this check, the business received this check and entered in the cash book, but not credited by the bank until later date. So those two checks are not entered in the bank. The uncredited check are not credited in the bank because either it is in transit. Another example is the book errors. The book errors are amount credited or debited incorrectly in the cash book. So we are going to talk about the two second categories differences. The second categories are item appear in the bank statement but not appear in the cash book. It is also possible that there is some item which is appear in the bank statement but not appear in the cash book. Those items, the examples are categorized in the two classes. The first classes of those items are item which is direct debit, and the second classes are item which is direct credit. So direct debit are items appear on the debit side of a bank statement but not appear in the credit side of the cash book. For example, of that items we have interest charged by bank on overdraft. It is possible that the bank charge to their customers interest on the overdraft until the date of bank statement. The customer have not recorded those interest charge. Another example of item appear on debit side of the bank statement but not appear in the credit side of the cash book is bank commission and bank charges. So the bank may charge a customer some commission because the bank goes in this instead of their customers. The bank can purchase shares on behalf of their customers and get some commissions. So those commissions may be debited on the bank statement, but until that date bank statement is sent to the customer does not record those bank commission or charges. The bills of exchange or dividend paid are another example of item appear on the debit side of the bank statement but not appear in the credit side of the cash book. Another example is a standing order. Standing order is also an example of direct debit. Standing order, these are the orders by the account holder to the bank to make regular payment of a fixed amount at a specific date to certain firm or person. Dear friend, as customer of the bank, a creator of the bank, may give order, may rule the bank to make regularly monthly payment to its employers are examples of standing order. The creator of the bank, the customers of the bank, may rule the bank to make regular payment of a fixed amount. For example, regular payment for banks create employees at a specific date to certain firms. So the bank may debit those amount, but until the date the bank statement is sent to the creator of the bank, the client does not credit that amount in the cash book. Another example of direct debit is dishonored check. So, dear friend, dear viewers, I wanted me and you to get some knowledge and skills very clearly about the dishonored check. So, dishonored check is also called bounced check, is also called bad check, or non-sufficient fund check, is also called labor check, cold check, returned check, or hot check. So the dishonored check are a check received from a customer and banked, but then returned unpaid or dishonored. Dishonored check are a check received from a customer. This customer stated here is the customer of the client of the bank. For example, PATERA TV Limited Company have sold some camera to Modern Technology Limited Company. The Modern Technology Limited Company are paying those camera using a check. So when the PATERA TV Limited Company banked that check, the bank see that bank have insufficient amount or fund, and then return or dishonored those check to the PATERA TV Limited Company. So from a definition above, it is understandable that bounced check should not be recorded in the bank statement. Do you catch anything, dear friend? Because bank only credited their customer's account when they actually received cash. So when the bank are not received the cash, can't credit the account of their customers. When you see in the definition of the dishonored check, it seems like dishonored check is not recorded. But dear friend, when we see on the bank statement, the dishonored check is shown on the debit side of the bank statement. Why? Dear friend, dear viewers, dear followers of this PATERA TV, this means that the bank will usually credit the check when they pay in the check. Means that if you deposit the check to be credited on the account held in the bank credit your account, and then the bank show that those check has insufficient fund. Then they then send check to other banks of the customers, and the check is returned to them as dishonored. If your bank send the check to other bank to see if your customer given that check have another account in another bank to withdraw the money to honor that check, and the check is returned to them as dishonored, then they will be debited to cancel the account to cancel it. Dear friend, dishonored check, niba banke yakiriye sheke wahawe n'umukiriya wakuguriye ibintu runaka, banke ikabona ko iyo cheke itazigamiwe, irakredita account yawe nk'ibisanzwe, ariko ikora akazi ko kohereza ya sheke ku yandi mabanke kugira ngo irebe ko nibura wa mukiriya wakuguriye ibintu akaguye sheke afitemo izindi konti ziri amafaranga babashe kuba bakishyura cheke. Iyo sheke izengurutse ayo mabanke yose ariko bigasanga nta handi hantu uwo mukiriya afite account iri amafaranga ku buryo yakishyura iyo sheke irongera ikagaruka hahandi yavuye. Igarutse hahandi yavuye, nibwo noneho iyo banke yawe wowe ubitsamo ihita idebita ya cheke kugira ngo ikansaringe ya credit yari yakoze mbere. Ibyo ngibyo akaba ari byo twita dishonored check. So dear friend, dear followers, dear viewers of this PATERA TV, this is the first class of item appear in the debit side of bank statement but not appear in the credit side of the cash book. So the second class we have direct credit. Dear friend, dear viewers of this PATERA TV, the direct credit are items appear in the credit side of a bank statement but not appear in the debit side of the cash book. For example of that items, take example of bill received trust bank or dividend received trust bank. Dear friend, this question is 3. The sub question number A is ended here, but we are going to deal with sub question B. The sub question B is asking to make bank reconciliation, but before starting solving this question, let me remember about how to make bank reconciliation. Dear friend, dear viewers of this PATERA TV, when we make a bank reconciliation, we adjust the cash book. This method simplifies the procedure of the recording of the reconciling the cash book balance with that of bank statement. In our question B, as asked, we are required to make a bank reconciliation statement, but first we will start by adjusting our cash book. So when the bank reconciliation is going to be made, we've adjusted the cash book. This method simplifies the procedure for reconciling the cash book balance with that of the bank statement. This is because all of the check not presented for payment and presented check, and not credited and credited check by the bank are to be adjusted in the reconciliation statement, as all other differences are adjusted in the cash book. You catch anything, dear friend? Any case you have, comment. Write in the comment. So when preparing bank reconciliation statement, you can start with balance either of cash book or bank statement. Start on the balance we wish. This format is applied when cash book is not adjusted. So when beginning with debit balance on the cash book or bank statement, when we are going to make a bank reconciliation statement, but you start with debit balance of a cash book or bank statement, then add and presented check and add debit credit as I stated or I explained above, and deduct and credited check and deduct direct debit. This is easy way of making bank reconciliation statement. What is required is to know what is unpresented check, what is direct credit, what is direct debit. Then your end is the balance as per cash book or balance as per bank statement due to the balance you have started with. So when starting with a credit balance on the cash book or bank statement, what we are going to do, we are going to reverse the first one. So the first we are adding and presented the check, but when starting with the credit balance on the cash book or bank statement, then deduct and presented check, deduct the credit and add and credited check and add direct debit. Then you will get the balance as per cash book or bank statement. So according to our question, we have data given. Data given. In our question, the data given is that question B. We have debit balance in the cash book, which is $80,550, and credit balance in the bank statement is 111,230. We have cash book had been undercasted by Rwandan fra 9,000, and we have uncredited check which is 20,820, and we have unpresented check which is amounted to 42,535. So the question is to make bank reconciliation statement by starting to bank statement balance to cash book. So here we are going to start on credit balance. So the data given we have cash book balance. Cash book balance equal to Rwandan fra 8,515. We have bank statement, balance which is equal to 111,230 Rwandan francs. We have undercast equal to Rwandan fra 9,000. Have unpresented check. We have uncredited check, uncredited check equal to 20,535 Rwandan francs. Then we have unpresented check equal to 42,820 Rwandan francs. So we are going to start by adjusting cash book. to have cash book. Cash book adjusted. We start with balance. As per cash book. Which is equal to 8,000 515. We are going to add this undercast. This is undercast is decreasing the debit side of the cash book. Then we are going to add it. Add the undercast. Which is equal to 9,000. So the balance as per cash book adjusted is let me take calculator. Calculator is this. Eight thousand 515 plus 9,000. Sorry. Plus 9,000 equal to 89,500 89,515. So then this is cash book adjusted. Then we are going to make bank reconciliation statement of bank reconciliation statement. Bank reconciliation statement. Dear friend, we began with balance as per passbook or bank statement as per bank statement or passbook. Is equal to 111,230. Deduct and presented check. Deduct and presented check, which is equal to 42,535. Then add the uncredited check. Add the uncredited check. Uncredited check is 20,800 20. So let me take a calculator to do these figures. You have you have 111,230 minus 42,535 plus 20 plus 20,820 is equal to 89,515. So the balance as per cash book is 89,515 515. Dear friend, dear lovers of this PATERA TV, this is the end of listening today. So please, dear friend, subscribe on this YouTube channel, on this PATERA channel, in order to continue get updates about the video uploaded to this YouTube channel. Comment, don't hesitate to comment on this video, share, like this video as for contribution. So thank you, God bless you, stay in peace.